The IEA cuts its global oil demand forecast for 2011 and 2012. The Federal Reserve preps for its final meeting of the year, and stock futures are inching higher after Monday's carnage. I'm Alix Steele, and the morning call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Alix Steele with The Street, and together we bring you the morning call. Scott, stocks got really hammered yesterday. It was a tough day for the S&P. You were long, headed into the session. How did you balance your position?
Well, I went out long on Friday considering we had a strong day. I thought perhaps the headlines would construe that what happened on Friday could give enough time to get some more concrete solutions, but it went on the other side. So in the morning, the market got hit hard, so I got stopped out of some of my longs. But what happened again, which has been happening often, is at the end of the day, it bounced off the lows. We continued to hold higher. So I got back into some longs, just a little less than what I had going into yesterday.
So doesn't that mean that that's constructive? That it bounced off? And
it means that on a short term, it's hard to handle. But on a longer term basis, if you're looking for a higher move, it hasn't broken any of the macro rules to say that the rally is off the table. It's just taking longer than momentum traders like myself would like to see.
All right, so you added some positions back. Let's look at the charts to see where you'd be adding even more of your positions, or where you'd be selling out and maybe getting short.
Well, today's Fed day, so it's always a little bit weird or frustrating.
I see, yeah.
So here's a look at the spiders. So if you take a quick look here, you will see that as we closed very strong on Friday. Okay, and then yesterday, it seemed like we were going to head into that gap from November 30th. So at that point, a lot of people got a little lighter because once you go into a gap, you never know where you're going to go. And there was some room down to almost a 50-day at 122.74. You could have went halfway in and went down to 122. But you know what? It held the gap. That means that this open area, this gap that is considered strength, is still intact. So with that said, in the afternoon, I got back a little bit long. And now it seems as if we're still in this upper flag. And at some point, if we could ever get a little bit more, a little constructive news, or maybe S&P comes out and they downgrade France, or they do and we blow it off, we could finally get above this 126.45 for what could be a performance-chasing move, back to the highs of late October or even higher into first quarter 2012. But for right now, we're still in a holding pattern where I think you have to be involved, but you can only be involved with what you can handle.
So you mentioned Fed Day. We get that Fed announcement at 2:15 this afternoon. How do traders normally sort of manage a Fed Day, and how frustrating is it?
Well, you have the trade going into it. I wrote a note yesterday saying sometimes they open up and they trickle it up into the Fed announcement, and then you get that volatile trade for about an hour, and typically the real move happens from 3:15 to 4. So don't get yourself chopped up.
Don't leave your desk.
Yeah, so exactly. Or leave your desk until about 2 o'clock and then come back at 3:15. But as far as the macro picture, don't get too concerned. And then usually you get a trend move from the other side of it, the day after. So there's a lot of things, a lot of intricacies that happen on Fed Day. So I'll get more into that on the radio as we go on.
All right, good stuff. So let's go to some sectors that you might want to be keying in on, especially as we're seeing this early morning rally today. Retail, one of the best sectors from yesterday, held up really well.
Retail continues to defy what everyone says shouldn't be going on, that consumers are tight, unemployment's high, they shouldn't be spending, but meanwhile, it acts best, and price is key. So the RTHs are holding higher. If you look here, take a look. We have some numbers coming out today. This was the highs, which, we failed at, but so did the market, but we're still holding above, some key moving averages. We're in this upper area. You could almost be long versus, this 110. And I do think there are two stocks I'm going to focus on today, which is TJ Maxx, which looks good. Look at this chart. You had a big move through prior resistance, holding higher. You could be long for momentum versus just say this 62. And if it starts getting above 63, 64, it could continue higher.
And you have to say, too, that consumers have actually been building up their savings in the last month, the recent data shows. So that's a good sign. It means they're not depleting their savings in order to spend. But, okay, you mentioned two stocks. So what's the other stock that you're going to be looking at for today? Because we have November retail sales coming out that encompasses help me, what's the word?
It includes.
Encompasses, it includes Walmart as well as private retail businesses, so it's going to be a good read on the holiday sales in general.
Yeah, so I think a laggard but looking decent with cash flow is JCPenney's. If you take a quick look at JCPenney's, there's a level here. You had a nice move up this 30, came back to old resistance, wasn't strong enough to get through. But I think if it holds above 32, it's in the cards for a move above 34 for some momentum. And real quickly, Lulu also acting a little bit better. It went green yesterday while the market was red. So I would say for momentum above this 48, it can continue back to the moving average resistance around 50.5.
Okay, let's go to some of the losers that we saw on Monday to see if there's any opportunity. I would have said the financials. I mean, anytime Europe gets hammered, so do the big banks.
Well, the financials had a big move, and right now they've been consolidating to the downside. Goldman did break below 99. I think it's important if the banks could bounce back today and hold it. I still think it's constructive, for a January effect type play going into the first quarter of next year. And then the OAHs were also weak, but it's still putting together that inverse head and shoulders pattern that we've been talking about so often.
And especially with oil, we're going to see some volatility, right? And we had the IEA downgrading global oil demand forecast for 2011 and 2012. We also have an OPEC meeting on Wednesday. June was a complete disaster when they met. They couldn't agree on what to do about production. Saudi Arabia has been ramping up its production. Iran and its allies have been saying, you know what, forget it. Oil is priced fairly. That's a lot of volatility. Is it worth a trade or an investment at this point?
I think for the OAHs, fundamental analysts say that you need to be at 90 for a sweet spot for the refiners. So I think we're around 98. So there's still some room that if we do come down, it could be good for the consumer and it could also be good for the refiners. So on the OAHs, we're anticipating a pattern building. So when you anticipate, you only do a tier 1 because you're not getting confirmation. And right now, you have this inverse head and shoulders pattern. Here's the left shoulder, the head, the right shoulder. If you want to be long something going into 2012, this is your tier 1 long into weakness. Perhaps buy it around this 112 to 115 with a stop at around 105. That's about a 7-point risk. Versus if it starts working, you could add when it breaks this downtrend around 125, and then you get confirmation of the pattern above 132. And this is going to take time. This has been 5 months. It usually takes about 6 months for it to get complete. But this is the measured move from the head to the neckline, so that's about 30 points. So that could be a move up to 160. So that's a 2012 theme.
And then what about tech? Talking about 2012 theme, it kind of got beat up a little bit yesterday because of Intel lowering Q4 guidance, although it was a supply, not a demand issue. So how did the Qs hold up? Was it more positive, more constructive?
I think they were in line. They didn't outperform, but they didn't underperform. It seemed like the market was going to absorb yesterday better until the Intel news, which was a surprise. If you look at Intel real quickly, it still held its 50-day. It was at new highs, which is sometimes hard for Intel to do. And then it did hold the 50-day. So I think it needs to have some time. If you're still an investor in Intel, you probably have some nice profits. So just stay the course right now. It's just not going to be a momentum trade. And as far as the Qs, it's still in this little flag type pattern after a nice move from after Thanksgiving. So I would say, keep watching it. But if strength comes back to the market above 57, you could see some energy come back into this group.
And we will be back talking about the sector we just avoided, which is gold. What to make of that almost 3% move on yesterday. So stay with us.
Hi, I'm Sean Hendelman, CEO of T3Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
As promised, we're going to get into gold here, sliding almost 3% and as much as 3% yesterday. All right, technically, Scott, what did you make of that down move?
Well, we've been watching this wedge get put into place. It's been like we call a pattern of indecision. We've had a correction in gold from the past few months ago, and now people are not sure whether it can continue. So you've had that tightness come into play. And then yesterday it resolved to the downside, which means it still could go lower. But at this point, I think a lot of the downside move is out of the way.
Okay.
So if you put together a plan, you could be a buyer of gold going into the first quarter of last year the way we did this year.
And I do have to say, on a fundamental level, I predicted yesterday, I said we're having this, $50 sell-off, and I said the GLD is not going to shed any tons, or maybe 2 tons. It shed less than 1 ton. And so that tells me that there are investors, as well as traders, because the GLD is a good trading tool for a lot of you guys,
yes,
that are holding on to their gold. They're not selling. They're not taking advantage of that big volatility, that big $50 down move, and that's going to wind up being supportive. So I wonder if this is still the euro headlines, the dollar, the euro trade, because gold is moving with the euro. One concern I do have is India. There have been very real concerns about a slowdown in India jewelry demand, particularly because the rupee's been so weak against the dollar.
Plus their whole, stock market's been crushed. So.
Exactly, and so the growth is really small, and that is a big worry. I mean, China demand cannot make up for Indian demand if Indian demand falls off a cliff. So headed in 2012, that's something I definitely want to pay attention to, and I think it needs to get on people's radars.
Well, for investors, we've talked about a tier system. And ever since we put that top in, we've talked about being in tier 1 at best, especially if you own it for a long time and then trade around it. So if you look at the chart of the GLD right now, you will see that if you remember back in late August, you had this outside day. I always talk about outside days because sometimes they lead to something. So if you were in any more than a tier 1 after this big exciting move, this was a sell signal. Then you had this wedge right here. I remember talking about it, saying if we were to break this 170 area, that's your other out. So if you missed your outside day, you get out here. And then since then, it's been just a lot of little trades. This was a nice little active trade from this lower level that went back to test that resistance. Then we just consolidated again. And now here we are today on the outside of this wedge. Sometimes you come back and you retest it, so you can't just short it today. But if it hits this area and fails, you could see a move back to this longer-term trend line and the 200-day, which is around 157. And if you take a longer look at it, you will see that this uptrend that's been intact for multiple years, could come into play. And this is where long-term money is going to have to support it. And that's around 157 on the GLD, which you said correlates to what?
We were saying like 158 was what that low is. We were like 1535.
So 1535 is probably a good spot if you sold it correctly to look to buy it back, or if you missed the move for the past few years and you didn't pay up at 1900 and chase the excitement, that's probably an area that you could focus and test.
And I think that if this down move continues, investor psychology might be damaged a little bit a la silver that we saw in May. But I was also pointing out that there still are fundamental factors for gold: central bank buying, a supply shortage that really will support it in a way that would not support silver. So just to keep that in the back of your mind too.
Exactly, and if we do get a hard break, if all of the fiscal treaties that need to be ratified next March, if all of a sudden countries pull out and Greece doesn't do it, this
and all
and that.
the global rates go up, but whatever, let's see if that actually happens. Okay, so let's go to some stocks. Want to hit on a few very quickly. Randgold is one that I love to look at. It was down about 2.8% yesterday. That was right in line with the gold price added to the NASDAQ 100 today. I wanted to see if the stock has now fully digested the production lowered guidance that came out about the 27th of November.
Oh, GOLD. Okay.
GOLD.
There you go.
There we go.
I'll tell you, you had a great call on that. Let me show you, if you remember, when they did lower it, stock was already down to here. And this was when we said you shouldn't be a seller here. It's into support. Maybe you could be a buyer. And then since then, you had a nice move back up to this prior supply. And at this point here, you have a nice little support level to trade against. This is that, what is that, about 103. And I would say if it can get above this 110, there is a lot of resistance here, but you can get a move back to 115 or so. So, it's been a decent trading vehicle. This is when momentum left in 115. They bought the bad news, which if you knew what the fundamental story there, which you tried to help everyone else, which was great, you had that snapback. And now I would say a close above 110, it could be well on its way to work to higher prices, but I don't think it's going to happen so fast.
And it bought the bad news well off its lows of the year, which was at $70, so something to think about too. Okay, want to check in because you wrote it down. RGLD, Royal Gold, we talked about it yesterday. Want to see how it held up.
Okay, well, I did say yesterday that with the pressure on gold, it's probably not going to have any momentum because you can't go without gold. So if you look here, it did break below, this upper area, and as a momentum trader, you probably sold it. So at this point, I think, if you're an investor and you caught it from back here when it broke above this resistance, I still think it's okay. On a macro stance, I would say trade it long versus 72. If it starts breaking below this moving average in the 72 area, I would think there's something wrong. With some more time, with some sideways action, it could make another attempt at some point to get that momentum back once gold finds a bid. But for right now, if you're in the macro position, trade it long versus if it breaks this, you might want to loosen up.
Do you think that the short gold stocks by GLD has now reversed? That's not an interesting trade anymore?
It's not like, I think for the last year or two, people love to short the miners and buy gold, and then all of a sudden the miners got a lot stronger and technically changed. So I don't think people are arbing that as much because they're limiting their upside, and it's been a frustrating trade. Okay,
let's turn to two big miners. I want to see which one you like best. It's going to be Newmont and Barrick. I read a report saying that senior gold producing companies over the last decade have traded at a premium of as much as 1.5 times their NAV. That's net asset value. Gold reserves measured at a certain price of gold and a certain production cost. Usually the cost that they're dealing with is much less than the actual spot price. So that means, and now that ratio is under 1, which basically is a really long way of saying that these stocks could be considered pretty cheap.
Well, I think some institutions started buying Newmont. I think Newmont, they like that name better. It's a little bit more reliable. You also have the dividend. We've had some good trades in this stock this year. At this point, I think it's a tier 1. I don't see any momentum coming back until gold finds a bid. Take a look here at the chart. You'll see, the first time we talked about it, or a few times we talked about it was way back here when it broke above that downtrend, and then you had a nice little flag pattern where when gold broke down, it came into support, had a rally back up, failed at resistance. It's coming in. I still think you could be long this. If you want to buy a dip, buy it a little bit closer to 63. Make sure this support holds, and then at some point, this downtrend will continue, and if it were to cross above it, with the price of gold, I guess, above 60, 670, it can get going. But for right now, I just think it's, something people are holding and not very excited.
Very quickly, like 10 seconds, does Barrick look better than Newmont right now, ABX?
Let's see. Not really.
Okay.
It's already at that support that, that Newmont's not even at.
So Newmont you want to look at?
Newmont you want to look at, and maybe trade long versus at 47 in Barrick.
Okay, we have 5 stocks very quickly. We're going to make you some cash today. Apple held up yesterday, about $391. Does that mean we're going to see that momentum continue?
Apple's one of the stocks that I'm long. It's flagging right now, I think, above 396. It could get some momentum back. For right now, it's consolidating nicely after that last buy at 376. So I'm in tier 1. I'm looking to add for cash flow if I could see relative strength and volume above 396.
What about Google?
Google's going to be my stock in 2012. I'll get into more depth then. I think it's flagging perfectly. Every time the market's strong, it wants to be strong. It's in the middle of its upper range. I think above 630, it can get going, and Santa Claus might be ringing down the Google bells.
And what about for Green Mountain Coffee? Could that see a little Santa Claus here?
Let's take a look. GMCR, I haven't looked at it the last few days, but you know what? As a bottom feeder type trade, this looks okay. Let me get off of this thing here. You move it on the side. It had a nice move off the lows, some continuation. And it's still flagging here. So if you're still short this one after a huge move down, you're a little bit of a pig. I think above 60, you can get a quick move to 65, kind of like we saw with Netflix yesterday. That has been a great trade from these lower levels.
And talking about coffee, let's go to Starbucks. Kind of eked out that gain yesterday. Is there more juice here?
Well, this one's been one of the stronger ones that could continue higher. I haven't looked at it in a few days, so I'm glad I'm putting it up right now. This is one of those strong stocks. If you have a list of like 10 stocks that can make new highs going into year end, Starbucks is one of them, and above this 44, it can continue for new highs.
And what about rounding it out? Westport Innovations up more than 3% yesterday.
Westport Innovations.
Westport Innovations.
Okay, what is the symbols on that one?
WPRT.
That's my fault. There we go. Oh, yeah, that's why it's on there. Nice tight channel, nice tight range. It's been doing not a lot for the last, since October, but above 30, it could have a move back to those highs. So I would trade it, long here and then add for some momentum above 30. Sorry, I forgot those symbols.
That's okay, Scott. We forgive you. All right, that's it for us for today. Happy trading, everybody, and definitely tune in when the FOMC delivers its rate decision at 2:15.
Yes, join us then.